Let's take forward then the discussion. We've got with us Cameron Brandt, Director of Research at EPFR Global, joining in on the show. Cameron, lots to talk about. So let's begin by just getting your take on the debt ceiling bill passing in the House. And you have the U.S. Secretary Janet Yellen actually saying that the federal funds could dry up in the coming days unless the lawmakers raise the borrowing limit before a week. Or do you think the global financial markets are actually worried that there could be a failure to do so?
They certainly, through the lens that we watch, which is the mutual and ETF fund flows, they really don't seem very bothered by it. The pattern of flows is indicative of attention to a potential recession later in the year. And frankly, I think investors have been almost too unconcerned about the risk that this round of the debt ceiling negotiations could turn sour. There is, however, I think a lot of liquidity out there. The money funds that we track have absorbed over 600 billion so far this year. And we're heading into the mid-June estimated tax payments, which will bring a rush of money into federal coffers. So the situation, while it should certainly be treated with respect, is not, I think, quite as dire. I think Janet Yellen is doing a little bit of sheepdogging.
Situation is not as dire as it seems, and there is quite a bit of liquidity available. But the question is, Cameron, you track the fund flows also very, very closely as to how it's going into certain asset classes. What's the trend on the ground at this point of time? Is it still heading towards the tech stocks? Is there some move towards Treasury as well? What's been the latest reading?
The four fund groups that have done really well, I would say, in the past 6 weeks have been U.S. money market funds, U.S. sovereign bond funds, China equity funds, and technology sector funds. Coming up on the inside rail, I should add for your viewership, India equity funds have seen very steady and increasingly strong inflows as well.
All right. That aside, then, what is the outlook then from the U.S. Federal Reserve in terms of their policy meeting? Do you think that that's going to be a key catalyst that the markets will watch out for, and what do you believe we could see?
I certainly think the markets are waiting to see what kind of guidance and/or action emerges from that meeting. I think at the moment the consensus is that they'll hold, but it's pretty unlikely that they will cut. But markets are certainly looking for the Fed to recognize that they've gotten on top of inflation and that the risks are now to economic growth in the second half of the year.
Okay, Cameron, on that note, we'll let you go. Thank you so much for joining us and talking to us about a whole host of factors which are at play at this point of time when the global arena is concerned.